All right, guys, today we're going to be talking about 4 stocks that I bought last Friday. We're going to talk about JP Morgan. They see some opportunities in the QSR segment. We're going to talk about what they said last week. We're going to touch on tariffs a little bit. That's going to be coming up April 2nd. So that's going to be impacting a lot of the market moving forward. This is 0 to a million. We show every single stock trade starting at 0 up to $1 million. Every stock that I buy, if I sell any stock, I have that on there as well. Every single movement of every single dollar is going to be documented on this channel. This channel is for long-term investors. We're looking for the long term. There's not going to be any day trading on this channel. No short-term investments. It's all long-term. We're looking for, the future, 10 years plus, preferably. A short term for us would be like 3 years. Okay. Thank you for clicking on and watching the channel. Thank you for everyone that's subscribed to the channel. I really appreciate it. If you could, I'd also appreciate you hitting that like button. It helps out the channel a lot. Apparently YouTube likes it when you hit the like button, and I do too. So let's get into it. 4 stocks the way I purchased. First, we're going to look here. The maximum, we started January 8th. We started out, I put 7,000 in, and that's the maximum there. We'll click to 1 month. So that's March 23rd, 2025. We've got $18,900 in the account. We have $1,100 in cash. I put $850 in every Friday. I buy 90% of that. I buy stock, so I spend $765. And I like to keep 85 in for the cash reserve, 10%. There have been times when I've spent all $850. Last Friday I did buy a little bit more than $850, and we'll talk about that as well. Okay. JP Morgan had an announcement yesterday about the QSR segment, the quick service restaurant industry. They feel like the third quarter and fourth quarter of 2025, things should start to turn around for that segment. Some of the industry is going to struggle in the beginning of the year. Most of the industry is going to struggle in the beginning of the year, but overall they think it's going to be good. They find that on the labor front for finding good employees for the QSR segment, they're positive on that. They think that there's going to be lots of good folks in the communities that are hireable. They also believe that a lot of the technology that's being embraced by a lot of the restaurants is going to help keep the overhead down. It's going to drive up the earnings as well and the profit margins. So that's going to be really good for the QSR segment long term as well. One thing that I found was interesting by demographics, food spending percentage. So total spending is 15.6% for the bottom 20% of income consumers. I thought that was interesting. They spend 4.7% at restaurants and 11% in the grocery stores. And then 11.3% for the top 20% earners, 5.2% at restaurants, 6.1% at the grocery store. I thought that was kind of interesting as well. Washington considers exemptions for some agricultural goods from tariffs from Mexico and Canada. So that's going to be something that we'll have to look into as well. That could impact the lower income consumer, right? If you're towards the lower end, the money's going to be tighter, and you might not be out in the quick service industry, going out to eat maybe on a Friday or Saturday. So that could play a role in the numbers for those customers as well. In regard to tariffs, we're just, April 2nd is right on the horizon there for the tariffs. A couple things here I just wanted to read. Trump did suggest that there could be some flexibility in how he imposes those duties. He suggested he didn't want to grant many requests for exemptions. Couple things here. Steel and aluminum, a 25% tariff on imports of steel and aluminum from all countries. That took effect on March the 12th. European Union responded to those metals duties, and they counter tariff on $28 billion in U.S. goods from April. So that's something where the European Union kind of countered what our government did. So that's something that we have to look into. Mid-April, including up to 50% duty on American whiskey, prompted Trump to threaten a 200% tariff on European spirits. So that's something. Canada and Mexico, Trump's at 25% across the board tariffs on the U.S. neighbors went into effect on Tuesday, March the 4th. 2 days later, Trump confirmed the U.S. would pause tariffs on the goods and services compliant with the United States-Mexico-Canada agreement until April the 2nd. For its part, Canada retaliated to the steel and aluminum tariffs with new duties on $20 billion of U.S. goods. The two countries have agreed to new talks, so hopefully something good comes out of that for everybody. In regard to China, Trump's enacted a new blanket tariff around 20% on top of existing 10% duties that went into place during Trump's first term. China has responded with up to 15% duties on U.S. farm goods, such as chicken, pork, that went into effect Monday, March the 10th. Okay, so that's another thing to think about. That's going to be playing a role in the stock market as well. Okay, so we look here. We've got $18,900 in the market for the account total. 1,100 of that's in cash. Don't look. The day is not real because remember we put $850 in it, so that's part of going up 937. So that's not the stocks itself. That's including the 850 that was transferred in. Something to keep in mind. All right, so we look here. We'll look at Google first. So on Friday we bought one share of Google, $163.08. On the 17th we had a dividend that was reinvested. We reinvest all the dividends on this channel, so that's in there as well. And as you see, we've been purchasing since January the 21st, where we're down 17.76%. 31st of January, we're down 19.89%. And we've dollar cost averaged all the way down as we keep buying, and we're down 10.8% for Google. Amazon, we bought one share at $196. Dollar cost averaging down. We at a high point here. We paid $238.61 on the 31st of January. So we keep dollar cost averaging that down. We're buying at regular intervals. We're buying stocks every Friday, no matter what. Chipotle, didn't buy any Chipotle for this public account. I did buy some for my private account. Dutch Brothers, that's a coffee company, Dutch Bros. I didn't buy any for this account, but I did buy some for my personal account. If any of you guys out there live in a city or state that has Dutch Bros, if you could do me a favor and put some comments down below, I'll give you an example. So I live in Las Vegas and we have Dutch Bros all over the place. There's one particular place where there's a Dutch Bros, and then literally on the same side of the street, probably 150 yards down the road, is a Starbucks. Now this was really cool. Last Friday I drove by. Dutch Bros is all drive-through. There's a walk-up window and you can order online, but it's not a coffee shop where you can actually go inside, for those of you that don't know. But anyways, so in the drive-through of the Dutch Bros, there was like 8 cars in the Dutch Bros line. And then 150 yards down the road, the Starbucks, there was 1 car in the drive-through line. And then I had that happen like a week ago also, where it was similar to that. But if anybody lives in a place where there's Dutch Bros, if you could put down in the comments if you can compare it, just randomly driving around a Dutch Bros versus a Starbucks, and kind of see the comparison of who's in the drive-through. In addition to that, here in Las Vegas, there's a couple locations where the Starbucks have actually are starting to build new Starbucks coffee shops that are small like the Dutch Bros, where they're just a drive-through. I've actually seen one on the east side of town where they're building one. So if you guys see anything like that where Starbucks is trying to copy Dutch Bros on the smaller, just the drive-through coffee shops, let me know in the comments below as well. It's good to know what's going on out there with our stocks, and if we have a lot of people keeping eyes on these smaller companies, we can watch them as they grow. Dutch Bros is one where they have 1,000 coffee shops in the country, and they plan to expand to 4,000. So they want to quadruple their number of coffee shops. So there's a lot of room for growth for Dutch Bros. For those of you that don't know, look it up and let me know what you guys think. MasterCard, I got some MasterCard. We only have one in this account. With the way the economy's going, tariffs, and all this up in the air stuff, a lot of folks are going to be swiping those cards. So that's something to look at as far as MasterCard. As far as that's just going to drive their business. McDonald's, we didn't buy any in the public account for McDonald's. We still have 2 shares, a little over 2. We reinvest all the dividends there. So $560. Meta, last Friday we bought 1 Meta, $594. Okay, and from a high point of February 14th, we bought 2 shares. That cost per share was $736. So we're down 19% from that one, but buying at regular intervals, we're down 8.88% in Meta. And then we've got Microsoft here. We bought 1 share of Microsoft, $386.05. We bought 1 share there, and you can see we first bought January the 21st. We're down 8.5% from there, but buying on regular intervals, dollar cost averaging down. We do have 3 in the red, but we've got 1, 2, 3, 4, 5 of them that are in the green, and that's pushed the average down to, we're down 3.14%. Truth be told, I wouldn't mind it going down again, at least for Friday when I buy more stock, so I could get it at a cheaper rate. But nonetheless, it's up since we bought it last Friday. Palo Alto Networks, didn't buy any for the public account here. Pulte Homes, that's a home builder nationwide, didn't buy any for the public account there as well. And Walmart, we didn't buy any for the public account. We reinvest the dividends there, so for Walmart, whenever we get paid a dividend, it'll be reinvested there. So that's kind of what we did over this week. For the QSR segment, I like Chipotle. Chipotle's got about 3,500 restaurants. They're looking to go to 7,000 restaurants in the U.S. I think that's a really good one. It's a walk-in restaurant, but you can order online. Chipotle is also going to, with the new restaurants, they're going to be building what's called Chipotle lanes. Those are where they have an actual drive-through, and that they feel like that's really going to drive business there. So it's good to have that drive-through. A lot of folks just want to stay in their car and get their food, and so that's going to be really helpful to drive business for them. They also are big into tech, which is another reason why I like Chipotle. They've been talking to a company that actually has a robot that makes the burritos. So, if you can crank out a lot of burritos and, you decrease your expenses by 1 person and increase the productivity, it's going to drive the profit margin, and then the earnings and earnings per share are going to go up, and the stock price shall follow. So that's another reason why I like Chipotle. They're adding the Chipotle lanes. They're going to double the amount of restaurants they have, and they're looking into tech to help drive profits and increase profit margins. So they're looking for technology to help them, and you can see we have a lot of tech stocks in here. And another one would be McDonald's, for example. McDonald's is, they're an innovator in tech as well. They've got the screens where people can order for themselves, and McDonald's is always looking for ways to decrease the overhead and increase efficiency. So McDonald's is another company that benefits from any advances in tech and innovation. So that's another reason why I like McDonald's. And previous video, we talked about McDonald's and the wonderful buying opportunities over the last 2 years during certain times when there was large dips. And they pay a good dividend, and you reinvest the dividend, and that helps your portfolio grow with the McDonald's as well. Hope you guys liked the video. Hope you found it informative. I would really appreciate it if you hit the like button if you've watched this far. Thank you to all the subscribers. Tremendously appreciate your support for the channel. If you found this informative or entertaining, I'd appreciate it if you maybe shared this with a friend as well. And every Friday we'll be buying stock, and this Friday will be no different. We're going to be buying stock this Friday as well. I hope you guys are enjoying watching March Madness. I hope all of your brackets are still intact. My bracket took a little bit of a beating the other day, but It's going to be a fun tournament, fun to watch, and I've got Duke in it to win the whole thing. So we'll find out.